Should you rent or buy a home in 2026? It sounds like a simple question, but the honest answer might surprise you. According to Realtor.com, renting is actually cheaper than buying on a monthly basis in 49 out of the 50 largest U.S. cities right now, saving the average household roughly $900 per month compared to buying. And yet, according to the National Association of Realtors, homeowners have an average net worth of $430,000 while renters average just $10,000. That is a 43-to-1 wealth gap. So, which is it? Is renting the smarter move in 2026, or is buying still the path to financial security? In this video, I am going to break down the real numbers, the real rules, and give you a clear framework to make the right decision for your specific situation, based on data from Zillow, Empower, Opendoor, and AD Mortgage. Welcome back to American Property Hub, your weekly guide to U.S. real estate news, home buying tips, and market insights. If you are new here, make sure to subscribe so you never miss our weekly updates. Now let's settle the rent versus buy debate once and for all, with real 2026 numbers. Let's start with the monthly cost reality, because this is where most people get confused. Right now, in 2026, with 30-year fixed mortgage rates at around 6.5% and the national median home price at $420,000, buying a home is more expensive than renting on a monthly basis in 49 of the 50 largest U.S. metros. The average household saves approximately $900 per month by renting instead of buying a comparable home. But here is what most people miss. The true cost of owning a home goes way beyond just the mortgage payment. According to Zillow and Thumbtack, the typical homeowner spends an additional $15,979 per year on costs beyond their mortgage, roughly $10,946 in maintenance and repairs, $2,003 in homeowners insurance, and $3,030 in property taxes. In some years, that number climbs even higher. Bankrate puts the total hidden homeownership costs at up to $21,400 per year. These hidden costs rose 4.7% in the past year alone, while household incomes grew just 3.8%. So, on a pure monthly cash flow basis, renting is the clear winner in 2026 in most major U.S. cities. But monthly cash flow is only one piece of the puzzle. Now let's talk about the number that changes everything: the wealth gap between homeowners and renters. According to the National Association of Realtors analysis of Federal Reserve data published in 2025, the average homeowner has a net worth of $430,000. The average renter has a net worth of just $10,000. That is a 43-to-1 difference. And that gap is not a coincidence. It is the direct result of home equity accumulation and property appreciation compounding over time. Here is how the long-term math works according to Zillow's latest rent versus buy analysis. A buyer who purchases the typical U.S. home with 20% down will finish 30 years later with approximately $735,000 in net housing wealth, from home equity gains minus total ownership costs. A renter who invests their down payment and monthly savings into the stock market ends up with a net position of negative $1.15 million after 30 years of paying rent. The homeowner wins by nearly $1.9 million over a 30-year period. This is why financial advisors consistently say that homeownership is the most reliable wealth-building tool available to average Americans. Not because monthly costs are lower, they often aren't, but because it forces automatic savings through mortgage principal paydown and delivers appreciation gains that compound powerfully over time. So if buying is better long-term, why do some financial experts say renting makes more sense in 2026? The answer comes down to one critical factor: your timeline. According to Zillow's latest research, buying a home only becomes financially superior to renting after approximately 5.9 years with 5% down and 6 years with 20% down. That is the break-even point. the moment when all your upfront costs, mortgage interest, and hidden ownership expenses are offset by equity gains and appreciation. Before that point, you would have been financially better off renting. Opendoor's 2026 analysis confirms this with a simple rule. If you plan to stay fewer than 3 to 4 years, renting is usually the better financial choice. If you plan to stay 5 or more years, buying typically wins financially. The Money Guy Show, one of America's most trusted financial advice programs, made a bold statement in their 2026 episode on this topic. They said that for many Americans right now, renting is probably the smarter short-term move if buying forces you to stretch beyond your financial comfort zone. The key insight is this. The 5 to 7 year rule exists because buying a home has significant transaction costs. Closing costs alone range from 2 to 5% to buy and 5 to 8% to sell. If you move before the break-even point, those transaction costs eat all your equity and leave you financially worse off than if you had rented. Now, here is something really important. The rent versus buy answer is completely different depending on where you live. According to Empower's January 2026 analysis of Zillow data across the 50 largest U.S. metros, buying is actually cheaper than renting on a monthly basis in 23 cities, while renting costs less in 27 metros. So the idea that renting is always cheaper is simply not true everywhere. According to Zillow's research, Columbus, Ohio, Memphis, Tennessee, and Buffalo, New York are the fastest places to reach the buy versus rent break-even point, arriving in just 3.5 to 4.2 years depending on down payment. In these cities, buying is an exceptionally strong financial move even in the short term. At the other extreme, San Francisco, San Jose, and New Orleans are the clearest markets where renting beats buying even over a full 30-year horizon. In these cities, home prices are so elevated relative to rents that buying simply never makes mathematical sense for the average household. A D-Mortgage's 10-year study of 250 U.S. cities found that homeownership was the more profitable choice in 199 cities, nearly 80% of all markets studied, even when assuming the renter invested both their down payment and monthly savings in stocks. Miami topped the list with a projected 10-year equity advantage of over $509,000 for homeowners. So, how do you actually make this decision for your own situation? Here is a clear framework based on the 2026 data. You should rent if you plan to move within the next 3 to 4 years. Your credit score is below 620. You have high-interest debt. You do not have enough saved for a down payment plus emergency reserves. Or, if you live in a high-cost market like San Francisco or New York, where the price-to-rent ratio is above 20, meaning buying is genuinely overpriced relative to renting. You should buy if you plan to stay in one place for 5 or more years. You have stable employment and income. Your credit score is above 680. You have enough for a down payment and still have 3 to 6 months of emergency savings left over. And if you are in a market like Columbus, Indianapolis, Pittsburgh, or San Antonio, where home prices are affordable and break-even arrives in under 5 years. The single most important question is not, should I rent or buy? The real question is, how long am I planning to stay? If the answer is 5 years or more and your finances are solid, buying almost always wins. If the answer is 2 to 3 years, renting is the mathematically smarter move in 2026, regardless of what anyone else tells you. So, there is your real answer to the rent versus buy question in 2026. Renting is cheaper month to month in most major U.S. cities, but buying builds dramatically more wealth over the long term. Homeowners average 43 times the net worth of renters. The break-even point is approximately 5 to 6 years in most U.S. markets, and the right answer for you depends entirely on your timeline, your finances, and the specific city you are in. In our next video, we are going to break down the Arizona versus Texas debate, two of the most popular destination states for Americans right now, and which one actually gives buyers and investors the better deal in 2026. That one is coming up next. If this video helped clarify the rent versus buy decision for you, please hit like and subscribe to American Property Hub for weekly U.S. real estate updates. Drop a comment below. Are you currently renting or do you own a home? I read every single comment. See you in the next one.